sugary carbonated drinks, but I think there's also a lot of room there for confusion, and I'll come to that in just a bit. But to reiterate what you said, Krishna, I think it's great big news for all those who've been watching and waiting for this news to come out. It's come out a little premature. We were not hoping that press conference to start this late in the day, but finally there is relief. What we do know is that tax slabs have finally been rationalized. So from 5%, 12%, 18%, 28% to just two slabs, and that's the merit-based 5% and a standard 18%, and then a demerit-based 40%, the sin tax as we call it. So let's begin with 5%. All essential items, and I have a list here of items from toothpaste to chocolate to shampoo to handicrafts, will now be taxed at 5%. Anything you consume on a daily basis, all your FMCG products will now charge a 5% GST. Now, as far as 18% is concerned, so all your TVs, tractors, cement, electronics, buses, three-wheelers will be charged at 18%. So I think where it's most interesting is when Nirmala Sitharaman, the finance minister, pointed out that they're also trying to correct the inverted duty structure on textile. And I think this comes on the back of the fact that textile industry needs some support at the moment, given that they're facing about 50% tariffs on their exports to the US. So on fiber as well as on yarn, the taxes have been reduced on fiber from 18% to 5%, on yarn from 12% to 5%. So that's a great big news for all the consumers out there. Now, let's also quickly talk about the 40% slab rate, because that's where it gets interesting. So all your sin goods and super expensive items, including your pan masala, cigarette, gutka, all of them will be now charged at 40%. We retain the 40% charge, but caffeinated beverages and carbonated juice, that's interesting, because remember, non-caffeinated or non-carbonated juice may attract 5%, but caffeinated and carbonated juice is going to attract 40%. So this is the classic popcorn case for you, if you remember, Krishna, where a salted popcorn is far cheaper than perhaps a spicy or a cheese popcorn. So I think some more conversations will happen as far as that 40% tax is concerned. And so great big news coming. And before I throw it back to you, I think very important question on what could be the net revenue loss to the government by the way of indirect taxes, 7 years since the GST was implemented. Now, estimate was that it would be to the tune of 85,000 crores to 2 lakh crore rupees annually. The government clarifying that don't call it net revenue loss, call it revenue implication, because we are hoping the buoyancy effect will kick in. And the only revenue implication we're expecting is to the tune of 45,000 crore rupees, much lower than what was anticipated. A lot of people we have spoken to in the last many years, 7 years of GST, and we've done numerous programs where people have been extremely confused. There have been many litigations, and perhaps the compliance will improve. In fact, there is a suggestion here which Revenue Secretary was making that the compliance in the past has improved every time there has been some sort of rationalization or reduction in rate. So that is the expectation. I think there are 2 points I would like to make here. I think very important right now is with regards to whether many opposition states are on board. Now, I know that finance minister is saying that every opposition state, all finance ministers have unanimously agreed, but we've heard in the past from Karnataka, especially a state that says it is going to experience some sort of a shortfall in revenue as a result of GST rationalization. So I would be interested to know how states are going to make up for it, and to what extent center is going to hold back on some of that revenue, if at all. Perhaps Shubhamoy can also come in here, and that's one thing that I would, hope to get some more clarity on. The other, of course, is what Dr. Charan was saying, is that it is likely to boost demand, consumption going forward, and perhaps will also propel economy. Now, that's something, a lot of experts are also doubtful of, because many of these items are essential items. So I'm not too sure to what extent people will start consuming, let's say, a toothpaste more or a shampoo more if, they are to be made any cheaper. I understand other non-essential items, their demand would be higher going forward, but perhaps the experts can weigh in as to what sort of a boost in demand or consumption we're looking at as a result of this rationalization.
It's gone deeper than we had expected. That's something that was quite something. Let me say what the government typically sees. Typically the high tax that comes from the excise GST, before GST used to be the excise, and all that used to be automobiles, liquor, cigarette products. These are the three big items which bring a lot of revenue to the government, states as well as the center, and of course, petroleum. Now, what the GST had done was that it had actually sprayed out lots of the other items. These items hadn't been touched, but lots of these other items had been spread out in a series of tax rates from 28% to 18 to 12 to 5, creating the problem that we were facing. So it has rationalized and all those things. What Finance Minister has now done and the GST Council has done is essentially recognized the smartness of just taking all of these, the ones that I said are not in this particular list, taking them out only to the 5 and 18% rate. So making it much more simpler for industry to handle. The reason why you find that the numbers, that 48,000 is actually much lower than what people expected is because there's a lot of, because as I say, a larger part of the taxes come from sectors which have been left untouched, and these were never part of we were not part of the GST, like the petroleum products like liquor, electricity, these, and tobacco, of course. These are the high yielding, and of course, automobiles. Now, in automobiles, what she's done is she has cut the duty to 18 for the small cars. But as people move on towards bigger cars, obviously the benefit of that jump will accrue to the government. So that is how the GST lay of the land has been worked out, and it's smart because that essentially ensures that those which were not really giving revenue but were just hindrances to the industry, hindrances to you and me. For instance, insurance. Insurance is a potential, but insurance wasn't a large earner. It can become a large earner now. I mean, let's see how people, and especially how the companies pass on this benefit. Then we will see insurance showing up results. Peculiar distinctions between one type of product and other type of product, which blighted quite a few of us. Now imagine that as a consumer, but imagine that as a producer. It becomes a huge problem for them to run. We have got so much informal economy. That informal economy is essentially producing economy, lots of food, lots of informal places where they work on. We want those to come into the formal economy. If the rates are simple, if they are straightforward, then obviously that gives people the confidence to make the transition to the formal economy. So I think that would be a big takeaway. Similarly, on the services sector, with this process rationalization, lots of unincorporated enterprises, which are the services units, will feel easier about the tax rate rather than having to go around like headless chicken whenever somebody would ask for a GST pakka bill. So those sort of things is what I think the council is banking on to make up for the loss in terms of the headline numbers. And I think that was always something which the experts on GST had always said that is what was the benefit of GST. So 7 years later, after having started the GST, we are now realizing that is what we needed. And sure enough, it'll be interesting to see how much of a boost this sort of a cut creates for consumers in terms of feeling confident about paying the tax, because that is what will be. So very soon, I suppose somewhere around in November, when we'll be getting the final the first set of November numbers about GST taxes post this cut, that we'll really know, because October will be the month when people will be paying the new rates, when we'll be getting to know how much has the benefit passed on to the economy.
The Prime Minister had said earlier that there's some bonanza coming. I thought it's a really bonanza. For a person like me, a Punjabi, paneer at nil is itself a very exciting news. The issue is that for some time, many of us had been arguing that we need to have simplified tax rate. As you know, the important canons of taxation say that the tax rates should be simplified, easy to understand, easy to implement. Once you have a very complicated tax rate, implementing it is very difficult, compliance becomes difficult. Now, one thing is very clear, the tax rate has been simplified, 5 and 18%. doesn't look very heavy. People would be willing to pay. The Laffer curves immediately comes into play. You will find better compliance. People are interested in complying with the payment. That is going to obviously increase the revenue. Though theoretically, they have argued that there'll be 48,000 crore, a burden, I think, in the immediate period. But I think the Laffer curve comes in, kicks in, and I don't think that's going to be so large. I'm happy that the center and states have put their minds together and there's unanimity in taking this decision. As far as the insurance sector is concerned, I'm also very happy that the 33 life-saving drugs, they have moved to nil. I think health issues are very important for any country where the labor force plays a role in productivity, and therefore providing nil rate on 33 life-saving drugs. When it comes to premium, again, the banking penetration in the country has increased tremendously through Jan Dhan Yojana. Nearly 97% of Indians have a bank account now. The insurance penetration has not reached that level. We had recently been discussing about it, and there is scope, much scope, for insurance sector to also extend now. So insurance penetration will obviously improve once you find that the terms and conditions, at least the GST, has been removed from there. Now there have been prime ministers schemes where insurance sector for the insurance sector at very nominal rate, and there's that Ayushman scheme, again very nominal rate. I think those will get an impetus. It's very important in a country where per capita income is not very high, social security to some extent provided in terms of food, but in terms of health, there's still a gap there. For population, 8% of it is aging. Elderly people also need some support. So I think it's very important that insurance premium has been provided a low rate. The third thing that I want to mention is if you want to kickstart the economy, I'm happy that we are projected to grow at 6.5%. Quarter one, we have recorded 7.8%, which was very surprising for many, many economists and all those people who had been forecasting. But the important thing is the country, if it has to become Viksit, within 22 years, we have only 22 years to prove our mettle now and become Viksit. Very important to unleash creativity. So I think the reduction in rates from 28% to 18% for things like buses, trucks, ambulances, air conditions, TV, these are going to unleash productive capacity in the country. And therefore, growth, which is now around 7.8% in first quarter, should easily touch 8 to 9%, something which I feel if we have to touch the Viksit Bharat threshold of 17,000 US dollars by 2047, we should grow between 8 and 9%. My own reading is that this is going to unleash that growth pattern. So therefore, I'm very happy. Taxation plays a very important role. GST has been doing very well. A threshold level has been created. Month after month, GST collections have been higher. Now the Laffer curve should be allowed to kick in. Low rates, higher compliance, higher revenue. That's what I think is going to happen. See, there are two things to it. And by the way, you know that there's a distinction between the rural and urban consumer. Urban consumers do use toothpaste, but rural consumers still use the traditional neem and datul. So if you go by the studies on toothpaste, you will be surprised. Between 40 and 45% of Indians, the toothpaste penetration is about 40 to 45% of Indians. So there is still lots of scope for these goods to also penetrate the Indian market. Now, the point that I'm trying to make is that once you have a low rate and seems all pervading, then the incentive to go and market these products or produce these products and the overall environment that gets created in the ecosystem is very encouraging. That's the point I'm trying to make. Now, the point that you are making. So my own feeling is, and I'm sorry to mention that, sin items are basically addictive items. And therefore, to some extent, the flow of revenue over there is reasonably inelastic. And Of course, these are some of those items on which the country and the states, everybody has a big role to play because they end up with various other complications too. Now, therefore, on the sin tax, as the name itself shows, that you always have a higher tax rate. And not only in India, even in other parts of the world, that's a very standard fiscal tool that is used. If you want to use the sin items, then you contribute into the kitty because there are long term implications of these sin items. Otherwise, for normal people who are doing their normal consumption in their daily life, you do not have much high rates. You must have noticed that even in the concessions that have been given now for cars and all that, there's always a limit, say 350cc motorcycles or small cars, there'll be nominal rates. But in case you are going to go for luxury items or bigger vehicles, obviously the rates change. So I think, and I'm not too worried, or neither do I would feel guilty for it. I think the luxury items and addictive items should certainly have a rate which is sort of a deterrent. But if you want to insist with it, then you better contribute to the fiscal policy. And I think to that extent, the government is right.